Tuesday, the 11th of July, and I've just entered into a blind buy position on the FTSE 100. Now, it's been a bit of a blind position bonanza recently with me certainly on my live trades and also on my trading in general. Now, I don't tend to take these very often. However, when they line up, like today, we have broken up above a resistance area, then made the pullback, which is what I was looking for. And when I see that type of price action, I am happy to get into a blind entry. Now, what I'm looking for is the potential bullish bounce into key level of resistance up above, where I would then be interested in looking for potential sell positions. Now, stop on this one is 20 points. With blind positions, you have to have a slightly larger stop just to give a little bit more wiggle room. And there is the potential there for this market to break down and test the zone below. I just want to give the market enough room to do that. Now, over the last couple of weeks with these live trades also, I have been trying to go over different things in each one. So this one, what I'm going to do is go over the internal dialogue that I have during a trade. So as a beginner, I'm sure you all, you go through that self-doubt and you want to jump out your trades, you think it's going to be a loss. As a professional, that doesn't really change. The only thing that changes is we learn how to deal with it. So what I'm going to do is take you through what is going on in my mind, those little voices, so you can see that there's really no difference. I just don't let it affect me whilst in a trade. Okay, we're just coming up to the 8 AM open on this market. Not a lot has changed in relation to the trade. I'm still looking for that bounce higher. As I've mentioned, there may be a breakdown to test the zone below. Okay, so the market is now open. What we can see is the market is coming down. It's coming down very strongly. Now, when you're in a trade and you see it moving against you like this in a strong way, the first thing that comes into your mind is that wave of self-doubt. You think you've taken the wrong entry. You think you've done the incorrect analysis. Now, for me, I don't do anything. But as a beginner, certainly what tends to happen or what can happen is that you're looking at something like this and you're thinking, oh my goodness, the market is moving against me. It's moving against me really, really strongly. I've done this completely wrong. It's going in the other direction. I need to get out of this trade. And then what you'll do is you'll think things like, okay, if I just exit this trade and then reverse into a sell position, I can get this back to break even. And then what I'll do is once I'm back to break even, I'll start trading properly for the rest of the day, because this trade entry that I've taken, it wasn't perfect. I did a little bit incorrect analysis. It just hasn't worked out properly. But what I'll do is I'll get rid of this one. I'll exit this trade and then I will start to trade properly. I won't put these ones in my trading diary because they don't really matter. It was just a little mistake. It's early in the morning. And then you'll see the market is coming down to test this zone below now. The only difference is now, well, there's a couple of different things. For me, I see the market moving against me, and there's the potential there that I will get stopped out of this trade. It's all part of trading. Now, I'm not going to lie to you and say that losing a trade ever becomes easy. When you lose a trade, you still take that hit. You still get a little bit annoyed. Trading is pretty much 2 steps forward, 1 step back. And every time you have a loss, you know that you're going to have to make back that money to technically get back to the break-even point that you were at before the trade, and then you have to start moving ahead once again. It's frustrating. However, for me, or for any real professional trader, you look at it in a slightly different way. You look at it in terms of, well, okay, this trade may stop me out. However, I have made the decision before this market started to move against me. I've done the analysis, I've set the trade up, I've got my stop in place, and I know what I am looking for. So if this does come and stop me out, first of all, it's only going to take me out for that 1% risk or whatever it is that you risk. It's not going to decimate my account, and I know over the long term, by accepting those losses, I can end up being in profit. Now, as a beginner, you don't want to, or it's very often that you don't want to suffer that loss. You almost get that feeling that if I get stopped out, it means I'm wrong and it means I don't know what I'm doing, and it can cause a huge amount of trouble. So things happen like I've just mentioned. You want to jump out the trade. You jump out the trade and you enter into a sell position, just trying to make that money back that you've just lost because you've got it wrong. Or maybe you'll enter into another position, another buy position down here, and you'll try and ride that one back up and then exit the first position at break even. And what happens is that The second position, the market starts to move against you even more, and you start to add more positions, and you've got more losses added to it. And what happens is, it can cause real damage to your account. Okay, so this market is just popping up a little bit now. As I mentioned, I was looking for that potential test of this level down here. And now, for me, I'm just still looking at this as normal. I'm looking for the market to potentially come up into this key level of resistance. Not a lot has changed for me. However, now, as a beginner or someone who is still, going through that phase of allowing their emotions to control them, they'll now be thinking, look at that candle, it's a strong bullish candle, and the negativity will totally have gone, and they'll be thinking like, oh, this is definitely a winner. My analysis is absolutely spot on. I don't know what I was worried about there. This is going to rally up. You know what I'm going to do? When it reaches that target, I'm not even going to exit. I'm just going to let it run, because this is probably going to be an enormous bullish rally day. And I'm going to end up making 50, 60 points. I'm going to end up making, instead of 1%, I'm going to make 2, 3% on this trade. Now, nothing has really changed. The only difference is what's happening in your mind. You're allowing the market to sort of control you, I guess. And then what happens is you start to make decisions based on the normal movements of the market. And that's what you're doing, is you're allowing yourself to make emotional decisions rather than cold, hard, analytical decisions. Sorry, I am still trying to watch this market and talk through this at the same time. Now, when you start to make those emotional decisions, that's where all the trouble comes in. You do not want to let that happen. As long as you are doing good analysis, you have a trading plan, you know it's successful in the long term as long as you follow it. You want to make your decisions based on that trading plan, not based on what you are thinking, what you are feeling in the trade. Definitely not what you are feeling. Definitely not what your gut instinct is telling you when you're in a trade. It's a terrible, terrible idea. Okay, so that the first candle, you can see it's closed as a bit of a doji candle. It has closed as a bit of a bearish doji candle. Now, again, for me, not a lot has changed. I am still looking for that potential move up. The trade is the trade. It has came down and tested that level. It hasn't pushed up as strongly as I would have liked, really. However, not enough has changed to get me out of this trade. I'm still looking for that move up. Now, as a beginner, again, you'll see something like this and you'll think, oh, it's closed below the level. That's definitely a confirmation that's going to stop me out. I need to get out of this trade. And you'll do the same things that you have done. Maybe you'll enter into that sell position. Okay, so we've just popped up quite strongly there. Now, we have actually popped up into this little swing high, which is where it is finding a little bit of resistance now. In all honesty, looking at this trade now, if I had entered into this after this pin bar right here, which is 7:50 a.m., if I had entered into a buy position after there, so rather than waiting for or rather than taking the blind entry, if I had waited for that signal, which did turn up, that would be my stop set on the chart, the little black segment, and I would have been watching up at these previous swings for a sign to exit. If I did start to see strong rejection from up here, I very likely would come out of the trade. Now, however, because I'm in a blind position and I have allowed a larger stop for that potential breakdown and retest of the zone below, my analysis is slightly different. I'm giving it a little bit more wiggle room. Now, there are benefits and drawbacks to both sides. With a standard entry, there's nothing to say it won't come up into that point. Show rejection, I would exit the trade, and then the market would go on to do what I wanted. Now, with a blind position, a little bit less confirmation, you're giving the market a little bit more wiggle room. Nothing to say it won't go up to your target, but also nothing to say it won't break down. In all honesty, now that I'm looking at this trade with that blind entry, and we have had that pin bar confirmation, in most likelihood, what I would now do is bring my stop up to that little black segment line around about 7,375. And then if it did come back down, because if it did come back down now, after breaking above that pin bar also, the likelihood would be for the market to make a stronger movement down. And then what that would allow me to do is I'd only have, instead of 1% loss, maybe 0.3, 0.4% loss on the trade. Am I going to Okay, so for this trade, what I am going to do is I'm going to maintain my stop where it is, so I can continue talking you through what it is that I am doing. There's nothing to say that this candle won't close and then it'll just rocket up into the target. But there's also nothing to say that it won't start to break down also. I'm just watching this candle as it is forming. Now, again, as a beginner, you're having that euphoric feeling. You're seeing that big, strong green candle and you're thinking, again, okay, well, we had that red candle and I did think it's closed below the zone and I was really, I was thinking maybe I should cut my losses early here. But look at this candle. It's so strong. It's green. I was definitely correct. This is going to make me so much money on this trade. It's crazy the sort of swings that your head goes through. But that is all part of the emotional side of trading. There's really no way for you to avoid it. The only difference is as you grow as a trader, you start to learn to ignore those voices. And they become a lot more quiet in your head. Or even if they're not quiet in your head, you just understand that by listening to them, you're going to damage your ability to trade effectively. So you just ignore them and you follow your trading plan. What I am going to do is I will likely pause this video. We are breaking down, so I just want to keep watching it at present. I'll likely pause this video just so I can cut it down a little bit because I'm talking through the trade in a lot more detail this time. It could end up being a very, very long video, which I really don't want. So I will cut it down wherever I can. Okay, so now you can see that candle has closed as a rejection pin. It's tried to break up and it has rejected. So if anything, it's giving a little bit of weight to weakness in this market. It also has rejected up above that at that previous swing. Now, almost certainly, really, with that rejection pin, I would be looking to exit at this stop level at 7,375 now. Now, let's say, as a beginner, you've also made that decision. You're bringing up your stop. You've rejected up at these little swing. You want to just tighten your stop, cut your losses early, let your profits run. I'm sure you've all heard that before. And you've decided to do that. Now, I'm not sure what this market is going to do. It might still break up, but let's say as a beginner now, you have also made that decision to exit at 7,375. So you brought your stop up, you've made a decision. Perhaps it was part of your trading plan. If you've seen rejection at that little swing high that I had identified, you would also look to tighten your stop. And potentially you would say something like, okay, well, if it breaks up to that level and comes down, you'd exit at break even. We're just going to say you're going to use that segment also. Okay, so what we can see is we have had another couple of rejection pins from breaking up. So for me, it's clearly giving warning signs that this market is potentially no longer or it's not going to break up to that target up above. Now we're only at -3.5 points. I've tightened the stop, or this is exactly where I would want to tighten the stop up to that 7,375 level. But as I've mentioned, I am going to continue talking through this trade. Now there's nothing to say it won't come down to that zone below, but there's also nothing to say it won't come down to that zone below, reverse once again, and then rocket up and reach target. However, 80%, 90% of the time now, I would just come out of this trade at 7,375. So, as a beginner, let's say, now you have already made that decision. The market is coming down to 7,376.5, so just above that stop level. Now you are starting to panic. You're thinking things like, have I tightened this stop too early? We've had those rejection pins up above. However, I remember reading something about continuation spikes. Maybe they're continuation spikes, and I'm just reading this incorrectly. Yeah, sure, they rejected. Okay, so we're just coming down to that 7,375 level. So you're thinking, okay, yeah, it's rejected from that previous little swing that I identified. However, am I sure I want to come out here? I'm going to lose money. It's going to put me on negative for the day, and I'm going to have to try and make this money back. So then what you'll do is you'll think, I'm going to move the stop. I'm going to move the stop, and you'll clear out the stop just before, okay, it's reached that 7375 level. So now technically you would be exiting. However, you've made that decision now. It's all based on emotion. You're thinking, I'm gonna come out of this trade. I'm gonna take my stop out of this trade. I'm gonna put it back to the original position. You're starting to panic, because the market is moving against you. Once again, you're getting those thoughts of maybe I should reverse this trade. But then what your mind's doing is it's doing crazy little things like saying, yeah, but you really should never exit a trade just to reverse a trade. That's a really, really bad thing to do in trading. I don't want to end up like that. I want to still be a professional trader, so I'm not going to do that. Now, what you're doing is you are kind of looking at ways to convince yourself that you're still trading properly. Now, you've just moved your stop, which you had already set. You said, okay, if it comes to this level, I'm going to exit. You've just moved your stop, which is a big no-no because you've increased your stop. However, you're justifying it by telling yourself, yeah, okay, I've increased my stop. However, I'm not going to exit this trade and reverse it. So they kind of cancel each other out. And what you're starting to do is you're starting to fall into that pit of trading based on fear, trading based on emotion. It's really no good. But it gets into your head, and that's what happens. And you can start to really spiral down now. There's nothing to say this isn't now going to come back up and reach target. But in all honesty, this sounds ridiculous, but if it did do that, as a beginner, that's one of the worst things that could happen. Because what it's doing is reinforcing to your subconscious that breaking the rules works. And this is one single trade. That's the problem. So if it works on this one single trade, you don't really understand it in those terms. You just remember that it works. And so you'll do it again and again and again and again. And then what will happen is one day it won't work. But the one day it doesn't work, you'll have added to those bad habits. You'll have added things like, now where we're sitting right now, I'm going to add another buy position. And then maybe it breaks down more, and you think, I'm going to add another buy position. And now, as we can see, we've had a strong bearish move down. After seeing these rejection pins also, it's not giving us bullish signals as yet. But what you are doing is you are sort of panicking, I guess. And you're just thinking, okay, this looks like it's moving down, but what I'm going to do is buy in again. I've still got a little bit of space for my stop, and already at the back of your head you're thinking, if the worst comes to the worst, I'll increase the stop. I just need to keep buying as it goes lower so that I can make lots of profits on the way back up and get me out of this overall trade at break even or perhaps back in profit. It's when you actually take yourself back and think about it, it is crazy what goes through your mind when you are in a trade. Now, the only way you can start to learn to cope with it is to start trading properly. Because this market is starting to break down. It's looking negative. We still have the pivot point underneath. We do have a support zone there, but with the rejection up above, it really is looking negative in my eye anyway. It might still reverse and come back up. If it does reverse and come back up, I'm going to see how it reacts to the resistance zone up above. If we see rejection again, then I will just likely exit the trade. In all honesty, I'd be out of 7375 if we weren't doing this video. Okay, so you're starting to think about adding positions, and you do add those positions because it's worked in the past. And then what's going to happen? It only takes one day. It's not going to work. You're going to catch a very, very strong trending day. Maybe it's not just a trending day. Maybe it's the start of a new trend, and you've just been buying into it, and it's just starting a bearish trend. And the market collapses for 2-3 days. The market can move a lot further than your account can handle. Always, 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 always. And what will happen is you'll either get a margin call from your broker, or else you'll have to accept the loss and it'll wipe out a huge amount of your account. That's the main thing that pulls beginners back. And then it either terrifies you so much that you never go back into the market, or it frustrates you so much that you're determined to make the money back. You jump back into the market, but you're so eager to make that money back that you throw your rules out the window because you think, okay, well, what I need to do is start making this money back. I need to abandon my rules so I can take more trades just until I get back to where I was before. And you know what happens? It goes terribly wrong and your account falls to pieces. Okay, so we're just showing a little bit of support at the pivot point. Let's see what happens with this trade next. Okay, so we've had a doji candle and the market is now starting to look bearish once again. Can I just say that I'm not going to do videos like this often. I'm not going to stay in a trade just so I can talk you through it on the regular because, it adds up in monetary terms. But for this video, it's one video and it is looking like it's going to come down. As I've mentioned, I'm trying to talk you through exactly what goes on in a trader's mind. Now, as a beginner, at this point, you've got everything crossed. Your fingers crossed, your legs crossed. You're promising that if it just moves back in your favor to the break even, you'll get out of break even and you'll never do something like this again. But in reality, what would happen is if it did break down, you would just continue moving your stop. Maybe you'd take your stop out altogether. You'd maybe look to continue adding buy positions, or maybe you'd come out and you would add sell positions, doing that reversal thing. Okay, I was wrong this way, let's try and catch it the other way. And on those occasions, if it was a trending day, that would benefit you and get you back to break even. But then you come to a ranging day and you make the mistakes and you do that, and that's when it decimates your account. Okay, so we are having a bearish move down. If it breaks below that doji candle, which it is doing, I'm expecting it to come down. What I'm going to do is I am actually going to exit this manually when I see 20 points because with the spread, okay, so we're out at 20 points. With the spread, it could have ended up being a couple of extra points, which I really didn't want to do. Okay, so the market has came down and I am out of the trade. That's a 1% loss. It did not break up. As I mentioned, as a trader, that is something you just have to accept. Now, as a beginner, potentially you could still be in this trade, hoping for it to bounce back up into that zone up above, and you're adding to your positions. It's absolutely a terrible idea. Okay, guys, as always, I hope that was helpful. I'm James Orr, and thank you.